Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is the most current daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I usually do, I've left my lines on the chart from the previous week so you can see how well my forecasts have been working out for our clients. Now, this is, again, the diamonds, which is a representation of the Dow Jones. And what I mentioned last week is that the Dow had broken down below this almost vertical upward trend line on this particular leg, and I forecasted a pullback to the 200 period moving average. Now, let me take this one step at a time so you can understand how important this particular chart is right now. If I zoom in, you'll see that today's volume was almost twice that of the previous day's volume. So that tells us that the sellers are accelerating into this downward trend, and we are about to fill this particular gap right here. Now again, I'm going to line this up so you can see where the gap fill point is. So next week, I think the Dow has the possibility of filling this gap to the downside, maybe Monday or Tuesday. And then what we have to do is we have to watch for a drop in volume. What I'll do is I'll draw a volume bar, or I guess you could say a forecast of what I think the volume is going to do. And I'll leave that on the chart again for next week so you could reference that. You know, this isn't a magic trick. This is simply technical analysis at its best, and it's more or less long time experience in the market that allows me to be able to read these charts with great accuracy. And my goal is to teach each and every one of you how to do the same thing so that you can get a feel for the market and get in and out of positions according to what you're seeing on the signals. Now again, this is the diamonds. My forecast is I believe that the gap will fill, and if it fills and we see a drop in volume, then the market can very well bounce from this point and go a little bit higher. I don't expect a recovery. I just think we can see more or less a dead cat bounce before the stock goes lower. All right, and that's the diamonds. If I look at the spiders, ticker symbol SPY, you'll see once again I've left my forecast line there. And it's pretty amazing how the market is following that very line that I drew last week. But again, you can see the increase in volume here is telling us that the sellers are in force. The spiders does not have an open gap up here. It has an open gap down below the 200 period moving average. So there's a chance actually that the spiders could drop at least to the 200 period moving average, and maybe even further to fill the gap before it bounces. We have to keep an eye on the volume. There's a good chance that on Monday we'll see an increase in volume as the sellers react to this week's price action. This week is the second worst week in 2014, and again, we've called that well ahead of time so that you can protect yourself and even reverse the position. Our subscribers on the Equity Oracle and the Option Oracle made money this week in the two trades that I put out. We shorted Apple and we bought into ABAX, which went up today even in the down market. So there are ways you can make money in the down market. You just have to keep a level head, stay disciplined, pick your stocks well and according to the technical signals, and don't trade over your head. In other words, don't take very large positions. Now let's take a look at the Russell 2000, ticker symbol RUT, and you'll see that the market did pull back from this resistance point that I drew last week. Again, if you're a regular subscriber, you can go back to that report and actually review what I said. It's actually a good thing to do that because it gives you some insight as to how we were reading the signals and how well this really played out. So the big test right now for the Russell it's going to be the 200 period moving average. If we drop down below the 200 period moving average, which I think we will, there's a small gap down here. See this gap right here? That could very well complete the topping pattern here and cause the 200 period moving average to start drifting into a downward position. Right now we have the mid stage of a rounding top for that particular moving average, and that could very well bring us to much lower prices in the Russell 2000. I don't think it's going to drop overnight. I think this is a gradual progression of price movement to the downside as the sellers take control, and eventually the buyers will just move to cash, stay on the sidelines, and let that all happen until we see a significant bottom or a significant support level reached. If we look at the Qs, QQQ, that's the NASDAQ market, basically the power shares QQQ. Here we go again. I left my lines up showing you what my forecasted trend would look like, and boom, there it is, following that line perfectly. We still have open gaps here. Actually, there's another one up here. So there's 3 gaps below the market that still need to be filled. So I think ultimately what will happen is we will reach down to the 200 period moving average before seeing any kind of a bounce as support tries to establish itself in the marketplace. Finally, the VIX. This is the most important leading indicator right now. And what was interesting is that this diagonal line represented my forecast for the VIX, and the VIX accelerated vertically, a little prematurely even, to this line, but still reached the point where I thought it would reach, and there's a good chance that the VIX could actually drop here to pull back to that forecasted and then bounce there. So if the VIX pulls back, remember it's a contrarian indicator, we could see a little bit of a bounce in the S&P. So all eyes should be on the VIX right now, especially if you're using this as a tool to manage risk. Please do yourself a very big favor and start to lighten up on some of your long positions so you have cash available to participate in the sale days when we go shopping. There's big sale days ahead of us. You need cash ready to go. If you stay in your equity positions, you have no cash to participate in the buy days when they show up. And then you're going to be waiting around to recover back to your break-even point, which is no fun at all. So that's the VIX. And today on the Market Guys Facebook page, I posted a link to this particular article that got picked up by several different news sources. And basically, the author here, Simon Black, talked about how paying down the debt now is almost mathematically impossible. So we've reached a point of no return. And if you continue to buy into this market when we are in such a sour state in the economy, then you're basically just putting yourself in harm's way, financially, that is, and you could very well set yourself up for a catastrophic loss. I would not want you to do that. And again, that's why I go back to these charts, because the VIX is a leading indicator, volume is a leading indicator, support and resistance when broken is a leading indicator. So many different things that you can learn from the Market Guys, and I just hope you stay plugged in. This is a very exciting time if you're positioned correctly on the right side of the market. You can buy contra funds that go up when the general market starts turning lower. So you could still buy things that go up, but if you keep your nose into these networks, I'm talking about the financial networks that you see on television, you're listening to these analysts that are telling you to buy this or buy that, I'm telling you, they're wrong. They're absolutely wrong. My 33 years of experience is telling me from my gut that this is not a time to be buying. And I have to be very careful because I don't want to come across as the guy that's yelling the sky is falling. This is an opportunity. It shouldn't be something that you stress out about. It's an opportunity for you to make money. And my goal as a market educator is to show you how to do that. So I hope you enjoy the rest of the weekend. Stay tuned to the Market Guys, and I'm really looking forward to see what happens next week. Have a good one. Bye-bye.